So the U.S. Federal Reserve left the interest rates unchanged today. And I think there's a strong perception out there that at their next September meeting, that there's a good chance that interest rates may be lowered at that time. And I think that we have to be very careful about trying to predict interest rates, especially since in October, we see a lot of trade tariffs going into place. And I think there's a lot of confusion about tariffs as well, too. Understand tariffs are a tax on United States businesses that import goods from other countries. So when that happens, basically those costs are going to at least somewhat be passed on to consumers, which raises prices. When prices rise, we see inflation. And when inflation rises, that's typically when the Fed Reserve has a mandate to then increase interest rates. Definitely the opposite of at least decreasing them. Now, I'm not saying that the Fed Reserve is going to increase rates, but it definitely lessens the likelihood that interest rates are going to be dropped when we see prices increase. So I think it's very dangerous to get in the business of trying to predict, certainly not advising clients as to what's going to happen with interest rates, because we've been saying now for the past several years that rates are supposed to drop this year and drop this year, and they're not. And why? That is due to rising prices. And now we're looking at the possibility of that happening again. So let's watch and see what happens and be careful not to predict with too much certainty during these times.